Folks presents to you Honest Talk.
Hi folks, today we are back with one more great and leading personality, Madam Batya Shulman. Batya is a chartered accountant and licensed financial advisor with over 22 years international banking and financial services experience. Prior to moving into wealth management, she was chief financial officer at an Australian bank. As a full-time working mother to 3 young kids, Batya understands that individuals may have the best of intentions in managing their finances, but often put themselves last. She is passionate about empowering and educating people on financial well-being and helping individuals, families and business owners reach their long-term financial goals. Batya is a keynote speaker and has spoken at many MNCs, chambers of commerce and NPOs in Singapore. So, let's begin our conversation with Madam Batya Shulman.
So first of all, ma'am, I welcome you to in this session. Thank you so much for joining and agreeing to share your thoughts with us. We are extremely very happy to have you for today's talk.
Thank you very much for having me here today.
Thank you so much, ma'am. It's our pleasure to have you. So, ma'am, moving to the topic of today's session, which we have chosen is understanding the importance of financial literacy. I think you are the best person to cover this topic. Ma'am, my first question to you is what is the best definition of financial literacy in simple words if we talk about in layman language?
Okay, what is financial literacy? Financial literacy is the ability to understand and effectively use various financial skills. This includes personal financial management, budgeting, and investing. So that's kind of the layman definition of what is financial literacy. It's about financial management and having an effective understanding of your finances.
All right, ma'am. I think you have really explained a very clear meaning of what actually it is, and I think the viewers, those who are watching this session, of course, they are going to understand what actually it is. Ma'am, my next question to you is, what if we talk about the components of financial literacy? Then, what do you believe? What are the main components of financial literacy?
Okay, perfect. Thank you. So when you talk about financial literacy, that's it's about financial management. And for me, it's about understanding this holistically. So what are those components? So if you think about money, it's money income that you earn. So this is your income that's coming in. So that's one component. The next component is outgoings, money that you spend. This is your expenditure. This is money that's going out. Another component is debt, money that you borrow. So sometimes you don't have enough income and your needs are more, so you may borrow. And examples of debt would be borrowing for mortgage or taking out a loan or credit card debt. Okay. Another component is your savings and what your opportunity to invest. So when you've got your income and by your expenses, anything that's surplus, anything that you can save, that is an opportunity. So savings and then investing that's another component. And finally, the last component, which a lot of people don't remember and don't include, is actually about protection. Okay, protection is a very important component of that whole financial management part. This is about protecting your financial needs, protecting your health, protecting your family, and it kind of holistically balances all your needs in terms of good financial management.
All right, ma'am. It was really a very quite insightful answer from your side. Ma'am, my next question to you, if we talk about the importance of financial literacy, then what actually are the importance of financial literacy in one's life? How much important it is?
Financial literacy is very important. And why? Why? Because it equips us with the knowledge and the skills in order to manage our money effectively. And why is this important? Because without these financial decisions, or actually the lack of financial decisions, it doesn't create a foundation for success. Now, the World Economic Forum have recently done studies, and these are studies that's done globally across many countries, the UK, Australia, the Netherlands, Canada, and what they found is that a large majority of people are actually running out of money about 10 years before they die. And women generally live between 3 to 5 years longer than men. They're actually running out of money even sooner. So it is so important that when it comes to financial literacy, that we don't only understand where we are now, but that we also plan for the future. The more knowledge that we have, the better. So what do we need to know? Why is it important? We need to understand where we are now. We need to have a good understanding of our financial situation. We need to understand what we need to save up for. Future planning. You can't only live in the present, you have to plan for the future. Retirement planning is absolutely critical. We have to avoid debt as much as possible and try and pay it off. We need to think about protecting ourselves, our health, and our families. And finally, another very important component of why financial literacy is important is about being well informed to protect us against financial fraud and being missold products. So do you know that a financial fraud occurs almost every second across the world? And unfortunately, this financial fraud normally targets people who have a lack of understanding or are misinformed, people who are vulnerable. So the more knowledge and the more education we have, the better financial decisions we can make. So it is so important to make educated, well thought through financial decisions that are in our best interest.
All right, ma'am. Again, you have very beautifully explained how financial literacy is very important in one's life, because that we have to think not only for present, we have to be look for future also, and to make us strong, because as we have seen this year pandemic, what actually going to happen in next few years, then we are totally unaware of. So we have to be protect ourselves for such kind of these disasters. Ma'am, as we have seen that there's a book called, I don't know, have you read or not, Rich Dad and Poor Dad. The basically main idea behind the book is that totally upon the financial literacy, how much it is important. And the questions come in book which the author tried to told us with this book. The question is that in school days, students or the children were not aware about much financial literacy, which is one of the basic skills and everyone must know about it. So ma'am, I want to know your thoughts. Do you think that financial literacy must be included in school curriculum and must be taught in school days?
Absolutely, big yes. I'm a mother. I've got 3 young boys, aged 5, 7, and 9. And I believe that the sooner you start educating and teaching and being role models to your children, the better. Now, it's never too young, it's never too soon to start learning about good financial decision making. And for me, what I do with my kids is I teach them the power of earning your money, of saving. So we at home, we have 3 jars. One's for saving, one's for spending, and one's for sharing. Now, when you earn, when you do something good, and you listen, or you do your homework, or you're a good boy, or whatever, you can save. Now, the power of saving, especially for children, is you can show them the beauty of compound interest. Now, Albert Einstein called compound interest the 8th wonder of the world. He who understands it earns it. He who doesn't pays it. And it's very powerful for young children to see the money growing up in their jar. Once they've earned sufficient money, then you can go and spend it. And also very, very powerful to teach them about sharing, about giving back. Charity, it starts at a young age, and the importance of giving and helping others. So yes, it should definitely be included as part of school curriculums.
Indeed, ma'am. I think it's a kind of privilege that today we got a chance to listen all these things from you. So, ma'am, moving to my next question. The question is, ma'am, what is actually a financial security?
Okay, so what is financial security? Financial security is peace of mind. Okay, when you have total peace of mind, when you don't have to worry about covering your expenses. So financial security is having peace of mind that the income that you earn is sufficient to cover your expenses. Plus, I'd add two other components. So it's sufficient to cover your expenses, plus you would have a sufficient emergency fund, plus you'll be saving for the future. Now, when I talk about an emergency fund, a lot of people say, well, what is an emergency fund? An emergency fund is money that you keep aside in case there's an emergency. And a lot of people say, well, how much? How much should I keep in my emergency fund? The amount you should keep varies from individual to individual, from family to family, depends on your personal circumstances. But as a general rule of thumb, your emergency fund should have 4 to 6 months of your monthly expenses kept as cash. So an example, say you spend $10,000 a month. As an example, you would keep between $40,000 to $60,000 as cash in the bank, and maybe just a little bit more to help you sleep better at night for that extra peace of mind. So financial security is about covering your expenses, having sufficient emergency fund, and putting money away and saving for the future.
Again, ma'am, you have very beautifully explained that how the financial security works and why it is important that we should keep the sufficient fund to if something like that which come in our life which we don't want, but if suddenly comes, then we have means that sufficient fund to face that challenge, and we must keep it with us all the time. Then my next question to you, what do you feel what must be the average age, or till what age and an individual must secure or achieve the financial security?
At what age? It depends on the individual. So when you would want to reach financial, well, everyone would want to reach financial security at every age. But the minute that you start working, you should want to reach financial security. And how do you reach financial security? What are the elements of financial security? And it's really about understanding your objectives and starting to save for the future. I cannot emphasize that. The sooner you start saving, the better. So it's very important to understand where you are, where you want to be, spend less than you earn, reduce your debt as much as possible, have a sufficient emergency fund, and invest your money for the medium to long term, very well diversified investment portfolio or across different asset types. The more well diversified, the better. And the longer you invest for, the less the risk. So I always say, don't take for granted what you have for life. Always plan for the future. And the sooner you start saving, the better.
All right, ma'am. Ma'am, as we have discussed about financial literacy, then financial security, then in same context, one term come actually here is financial independence. What does actually it means? How it is different from financial security?
Okay. So what financial security is when you're earning money and you can cover your expenses, right? Financial independence is you and no longer have to rely on your expenses, on income. Cover money that you don't have to rely on your income, or you don't have to rely on, not dependent on someone for money. So ideally what happened when you reach financial independence, you would have an asset pool. Could be property, could be investment, it could be a pool of assets that would generate you passive income to live on. So ultimately, when we aim to retire, when we aim to stop working, all of us should have hopefully some passive income that we can live on. In today's world, leaving money in the bank is not, with interest rates so low and inflation so high, it's not going to be sufficient. So we really need to think about our future and how we can achieve financial independence when we want to.
All right, ma'am. Again, you have mentioned very quite point that we have to always think about the financial independence, because there's no way to keeping your money in banks. We have to try to invest everywhere so that we could earn some passive income. Ma'am, my next question in the same context is, what are the crucial steps needed to achieve financial independence?
Start saving now. Don't leave it until it's too late. So there are very, very simple things. Start saving now. The longer you save, the better. There's less risk involved as well. The longer the time frame for investing. Spend less than you earn. Avoid debt. Create an asset pool that's going to work for you. Make sure that your asset pool is well diversified. Never put all your eggs in one basket. Never underestimate the power of inflation. Inflation erodes away your savings. Have a sufficient emergency fund. And a final point is, which is very important to thinking about financial independence, is think about what's important to you. What are you saving for? What are your goals and objectives? And in today's world, with social media, with Instagram, with Twitter, with Facebook, people are comparing themselves to other people. They put themselves under so much pressure. Don't compare yourself to your neighbors, your colleagues. Think it's not important. And whatever people post on social media, not necessarily true. Okay, think about what's important to you and start saving for your future and for your values and for your goals and for your objectives.
All right, ma'am. Again, you mentioned a very quite important point. I'm quite impressed that you have to look yourself. Don't compare yourself with others. You have to look your own goals, your own values. What are the things you wanted to achieve? Ma'am, in same context, I don't want to take you much time. So moving to my last question of this session, what we have seen is that when the people are in their college days, or say students, they usually don't take much care of the financial literacy, and they spend means a large amount during their studies, during their parties with friends, and there's a enormous lot of the things they spend, which if we look as a if we grow up and we look all the things, then we see that how means these are the very kiddish action we have done. So ma'am, what are the advices from your side to the students, those who are actually in their college, how they should learn all these things from their college days itself?
I think it's coming with a growth mindset and willing to be constantly learning. When it comes to financial management, when it comes to investment, I always say seek financial advice. Find someone who you can trust, who can help you. But if you want to learn yourself, learn some of the basic foundations, and some of them what I spoke about today is understand what's important to you. Understand what you want your money to do for you. What are your objectives? What are you trying to achieve? And understand what your risk profile is. Are you a very risky investor? Are you very conservative? And if you want to invest your money, make sure that you are investing for your risk profile. Okay, and learn as much as you can. Find someone you can trust who can help you. Make sure that you are very well diversified. Don't put all your eggs in one basket. And ask questions. Don't ever invest in something that you don't understand. So that's kind of my advice.
All right, ma'am. It was really a very wonderful advice from your side, and I think it was really a very wonderful and healthy discussion with you on the topic. We look forward to conduct more session with you in future, and thank you so much, ma'am, for joining and giving your important time.
Thank you very much, Harsh. It was lovely talking to you today.
Same here, ma'am. Thank you so much, ma'am.
Thank you.
Thanks for watching. Please like, share and subscribe.